first episode of 2026.
Is it?
Yeah, this has been the longest stretch of us putting out an official podcast episode since we started doing the podcast. So it's been, I think, almost 30 days since we put out our last episode.
Conversely, it's okay because 60% of the agents weren't working anyway.
Yeah, that's true.
It's probably all right.
Well, just kind of a quick recap. Dan and I were out of the office for the Christmas season. Took a little bit of a break. Usually we both do an end-of-year Christmas trip over New Year's. Last year we were together. This year we divided and conquered. And
I chose better than you.
You chose better. Well, I ended up going on a Caribbean cruise out of Puerto Rico, and on the way back, I didn't know that we were planning on capturing Venezuela, Maduro, foreign leader there. So our flights back got canceled, and we got marooned on Puerto Rico for an extra week. So that was fun. It was the longest vacation I've ever had to take. Forced vacation. So it wasn't great timing, as the first week back from New Year's is always one of our most hectic, busy weeks. So a lot of what I usually do falls on Dan. And
yes, it was pretty brutal because we had a lot of people still kind of extended holiday stuff coming back. We were a little shorthanded. With you being gone, I mean, for all of you who are listening who can relate, you're always working in your role, right? Like we travel, we do things, you're answering calls, you're responding to emails, but it's not a substitute for being at your desk with 2-3 monitors up, like in the zone where, you maybe have like software for, graphic design or whatever it is that you're doing. I just can't be as productive as I am dialed in my office. So it was tough. With you trying to work remote for like a week, figuring that out with the other thing that always happens, there's this psychological element, which I appreciate, because part of what we do in distribution is we're always trying to get people to work, to goal set, to have like their plans and know like their growth objectives, and trying to motivate people and get them to work is challenging. And we find that at the beginning of January, guess what? Everybody's really highly motivated. they have all
their new resolutions.
Yes, and they have their plans, which sometimes involves me or you or whoever. Mm-hmm. And you just find that early January, it is rugged. I mean, it is. And the other thing that happens is this weird, just situation where for weeks during December, when I am working, I'm sending emails or trying to do work, and it's going to a black hole where, guess what? Lawyers, attorneys, like you name it, whatever it may be, tax accountants,
carrier reps, carriers.
A lot of these people are just off for the holiday, understandably, it just happens. So then January hits and you just find yourself buried.
Yep.
So we have been buried.
The good news is I was able to make it productive, and I recruited 6 agents in Puerto Rico. So
that is true.
Yeah, we're growing the team.
We had some agents in Puerto Rico anyway.
Yeah, growing the team in Puerto Rico.
We made a very significant investment in having to buy licenses in Puerto Rico.
My daughter is always very impressed. This is good and bad, that no matter where I go in the country, I'm able to find a little bit of a way to do some productive work or meet up with some people.
Well, get this.
No matter where I'm at.
Well, you were in Puerto Rico and you recruited some agents, more of the team. Remember, I sent you pictures because I ended up driving behind one of our agents in Hawaii.
Yes.
And I was sitting here driving in Oahu, and I was like, holy shit, that's, maybe I won't name him, but I was like, that's so-and-so.
With our branding, our Medicare Advocates branding on their vehicle.
Yeah, and I'm like my wife and my kids were like, are you serious? I was like, yeah, that's one of my agents right there in front. And I was like, call the number, but it was a Sunday.
They're like, I guess I can see how we make money.
Yeah, and I was like, yeah, that's one of our agents here in Hawaii.
So expanding the empire from one end of the ocean to the other, the Atlantic through the Pacific. Yeah. It's quite the distance from Hawaii to Puerto Rico.
Yep, we got it all.
But hey, there's been, a lot of noise kicking off the start of the year. I think a lot of agents, the tone I would think that agents are feeling is a little bit of trepidation, a little bit of unsureness as to what's happening in the industry.
I think that's valid, but that's you should you should be feeling that way.
Yeah, and there's a couple things. Some of the carriers are making a little bit of waves, and people are looking at ways to interpret it. And I think one of the things that I've been seeing the agents have been asking questions about or complaining about going into this new year is some of the changes Humana's making are kind of what I would say is people are looking for answers or kind of wondering what's driving some of those. And as we've known, they made some changes in, what is the Nightmare Before Christmas or what's the nursery rhyme or whatever about the night before Christmas all through the house. That's when Humana made some of these changes, is the night before Christmas.
Yep.
And so agents have been wondering what that means. They also had some commission file issues, and a lot of agents were complaining about that. There's been long hold times with all of the insurance carriers. And as Dan talked about, as all these insurance carriers and everybody comes back to life at the beginning of the year, there's a lot of log jammed activities and business that's jammed up.
A lot of people are just laying low too. That's the real tone is that and I'll be transparent. Look, I'm sometimes not the most articulate person on here, and I can acknowledge that, but understanding the industry for the last however many years, as long as I can remember, it is like mush. I feel like I'm getting whipped from the carriers, from AEP, and it's like never enough, like more and more and more, give us sales, give us volume, sell. And then you take like this very, very brief week or two downtime, and then it's back to OEP and foot back on the gas and go grow like mush again, right? And that's how it has always been. And this year, it's just like most of the carriers are analyzing, looking at where they've landed from AEP. We already know that some carriers already overshot what they wanted. They got more business than they even wanted to. We've had, some carriers tell us like they way overshot their whole entire annual goal just in AEP. And we have other carriers who are kind of like, we're okay where we landed. We executed what we wanted. And so there has been nobody who has really emerged yet who has said, you know what, we found some money in the couch cushions, or we still have a desire for more growth. Let's go, get these initiatives in place and let's go really hard and let's go grow the business. Not a single one.
Yeah, there's some carriers that want strategic growth in certain areas,
Correct.
Right? And that's really what's emerged from this last year is we'll only take and want the business in these handful of areas.
And it's like,
right?
Hey, Mike, can you find me an agent in this zip code in Houston where I have this really good clinic, where we have good economics and a contract with this provider, and we want to grow our panel there. And so like, because we have good membership and we also have a 4.5-star plan, which gives us good, reimbursements, then get us membership in that particular zip code.
Yeah.
And so what Mike's alluding to is, okay, that's great to all play out like our dream scenarios. And what's going to really happen is, agents, there's going to be very, very different experiences if you're a local agent that's highly engaged in your marketplace this year, where you might find as a local agent opportunities that emerge based on your geographical location with some of these carriers. There might be great opportunities based on some of those things aligning. And you might be another agent who is like, still like many, struggling to find what products can I actually sell that a carrier wants me to sell where I can get paid a commission to render these services.
Yeah, what Dan's articulating is that the past couple of years there's been almost as much business or more business done during OEP as there has during AEP. And this year it's looking like that's definitely not going to be the case because most of these carriers are not in growth mode. And the past couple of years have been, that's great. You did this in AEP. How do we keep cranking?
Well, and look, we sold more. We as an org sold more in OEP than we did AEP. The last 2 years, I can't remember back the data before that, but consistently the last couple of years, our org has sold more during OEP than AEP. You have more actual calendar selling days than you do during AEP. Now, I think we're still up even, 30% this year from
We're
last
trending
year.
to be up during OEP year over year as far as business, but not the same proportionate amount that we were during AEP. So I don't think we're going to trend to do as much during OEP as we did during AEP for sure, but we're still going to be year over year up.
And I would also say that like as we as kind of stakeholders, business owners, people in the industry, as we're also looking at, and I'm telling this, look, I know carriers listen to this podcast. I know our competitors listen to this podcast sometimes. I'm putting this out there right now that I already know, and we've talked about it twice before, as soon as we get past OEP and we get into lock-in or ROI, whatever you want to call it, the abuse of the SEPs throughout this year are going to be heavily, heavily scrutinized. So if you're like one of those orgs out there who you're just banking on just crushing the numbers every single month all the way and through until the end of the year, and you're going to go abuse SEP, what is it, like request for materials or request for whatever that, ACC or whatever.
Yeah.
If you were planning on having reps submit 52 apps a month using the ACC election code, you're not doing that this year. And if you are, you're going to get shut down pretty quick. So
correct.
I'm just kind of setting the landscape for probably the rest of the year for some people.
I think we should kind of back up a step and reset, talk about where the major carriers landed during AEP and kind of what the industry is looking at right now. Because yes, there's a lot of eerie quietness amongst sales growth, and there's not as much positive indicators for wanting to take on a lot more business. And I think that's going to play into exactly what you're talking about scrutinizing SEPs and the reason why we're seeing hyper aggressive compliance. And there's been a lot of questions about that. So I think we should probably start there. And when you talk about winners of AEP, it's always whoever writes the most volume doesn't necessarily always win in the long run, right? We saw last year United won AEP where they took on a lot of that volume, and then last year they had to course correct.
Well, look, in life we always look at the scoreboard, right? You just want to look up at the scoreboard and say, hey, what's the score? Who's winning, right?
Yeah, and winning in especially the Medicare Advantage space these days is who's taking good profitable business that's helping the company, not just who's taking the volume of enrollments, because United it hurt United taking on that much business. And then this year, it's looking like there were many less carriers that wanted to take business. And I think everybody was a little bit optimistic, and Humana definitely benefited from the perception that they had weathered the storm better than others, and it kind of signaled to the market that they were willing to take on a lot of that business and really grow. And they definitely got what they asked for, and I think everybody in the space acknowledges that Humana was the clear volume winner across the country. And we know that they crushed their 2027 enrollment goals to the point where, they didn't really take drastic actions to shut things down, going non-commissionable and suppressed like we'd appreciated. But there's definitely a whole other set of other things and changes that they're making to really slow that growth and just change the focus on the type of enrollments and where they're getting those going forward. And it's not just a Humana thing, it's an all carrier are kind of doing that. But maybe we kind of talk about some of the changes that Humana's done over the past month. Before
we do that, let's recap a couple of the winners. You were talking about winning is different than just writing enrollments, but from the carriers that I've had, and again, this is not a complete comprehensive list. I haven't talked to every single small carrier regionally, but at least the big nationals, I'm pretty connected with all of them on a weekly or biweekly basis. The carriers who have expressed to me that they're really happy with their AEP results, Devoted is obviously they grew.
They doubled.
Significantly. Doubled. And really they wanted to get past this mark of having 500,000 members, right? And so Devoted very, very, very much feels like they had a strong AEP and accomplished what they wanted to. Scan also is a carrier who had some expansions and, a lot of positivity and momentum. They wanted business. They expressed that they wanted business. Devoted, I think, is very Scan is also very happy with their, AEP results, so to speak. Alignment is, again, pretty happy with what they did in AEP. And of course, you ask Humana, they way over delivered on what they thought for AEP. So those are the carriers that come to mind. For me,
one I was mentioning was Trinity. They had some of the small a lot of these regional conglomerates, and in some of the areas like Idaho, they literally sucked up everything. And you go
sweating bullets a little bit there.
What's your plan to ramp up operations to process all that growth?
In some areas, they didn't grow by 10%. They grew by 10,000% in some areas. So I go, okay. So we'll TBD. So those things are pretty big. A couple other things to mention before we really dive into more stuff related to Humana. I had a few housekeeping things because it's been up on forums and people were talking about it. I know like Cigna or HealthSpring, like their portal's still down. They've been having portal issues. One of the things that's also been just noticeable this year is a lot of carriers are having snafus. I know there was like some reporting issues with United Healthcare that they were working through, and their reporting is usually just spot on and great. They were having some issues with reporting early on. HealthSpring has their portal down. There's still, I think there's been agents talking on forums about some either commission discrepancies or reporting discrepancies with Humana that they're trying to figure out right now too.
Cigna, MedSup with, a lot of apps that hadn't been processed and things like that, log jammed up there.
There's a couple carriers out there that obviously there's a huge influx with MedSups this year with everything happening and the disruption. So there were a ton of Medicare supplements that were written, and for the underwriting process to happen, they're very backed up. We've been hearing from agents that it's weeks, and apps still aren't getting approved for subs. So that's also happening. So there is still a fair amount of chaos. But going back to the Humana stuff, yeah, we just found out, when was it? Like end of December, first week of January. I think it was first week of January, 2 weeks ago, when we got communication from Humana of
we knew way longer than everybody, than it was public.
Yeah. But they publicly went out a few weeks back, maybe 2 weeks back, and said, hey, we are halting all hierarchy moves. So everybody is frozen. And that's been the big thing going on right now in the industry, is it's absolutely frozen. And I knew, we talked about it on the podcast that as I looked forward into 2026, we were going to see crazy things from carriers. We were going to see other methods than just the levers to pull of being commissionable, non-commissionable, suppressed. They were going to look at other levers, like I said, of maybe not appointing agents or other things like that. I had alluded to all of that for this year. We didn't think it would happen as quickly as it did, but I think that's some really, really, really big news. And Humana signaled that it's not going to be permanent, but you do also see that at the end of every sales season, like AEP, reps, agents, there's been this whole workforce in the industry. And look, you kind of serve your place, but I keep saying it and you hear it from me over and over and over. I feel like I'm just repeating myself constantly, but this job and what we do is not designed to be gig work. It's not designed to be this thing where you get a job, you spin up at a call center or an agency, you barely get your license or you do some online certifications, and then you just, become a really knowledgeable, good, valuable insurance agent. It doesn't work that way. In what we do in the industry, there's so much nuance and things change and happen, and we need people who are very much business professionals and know what they're doing and develop very good skill sets over time to be valuable to the consumer and the carrier. And there's this whole segment of our workforce that are not that. They are gig workers and they don't do good work. And you find that these people start somewhere and then they complete a sales season. And then as soon as the sales season is over, they're looking for their next opportunity. And there's this whole transient kind of population in the agent workforce. And they're all looking for their next opportunity. And right now, Humana sucked up about 50% of the overall MA sales during AEP. And they've now blocked agent appointments to be moved from any sort of a hierarchy perspective. And you have all these transient agents now trying to move or align somewhere else and can't.
Yeah, well, let's kind of talk about why. And we don't speak on behalf of Humana, obviously. We don't speak on behalf of any of these carriers. We just, know what we see, and this is our opinion on certain things and, rumblings that we hear and observations. And as we've been talking about repeatedly on the podcast, sometimes it sucks to be right. And I think that by and large, the things that we've been talking about over the past couple of years are all coming to fruition right now. And the collapse of the teledigital side of the Medicare Advantage industry, we're really seeing the final pieces of that. And what essentially happened was when Medicare Advantage was trying to grow and proliferate all across the country, these big insurance, these big teledigital shops were effective way to grow a lot of that business. And then we evolved through COVID and the Joe Namath ads.
And compounded then.
Correct.
Yeah.
And what happened during that growth period and during COVID was you had 10 times the amount of agents get into the space that were telesales agents, right? Or call center agents. And as those started collapsing over the past 2 years for all the reasons that we've been talking about over the past couple of years, a lot of those agents kept realigning under different iterations. And a lot of that was conglomerating under a Humana affiliated FMO that everybody knows about. And there was a compensation model and metric there that was facilitating a lot of this teledigital business. Well, the problem is it was almost like musical chairs. The less and less opportunities that they get to, there comes a certain point where we're not growing, we're not expanding into all these different areas. MA is already 50% plus penetrated, and the whole market is retracting right now. But yet you have all these agents and orgs and sales entities that are trying to get business and make money. And so you almost have this self-perpetuating cycle that's cannibalizing itself.
Well, and it creates more friction too.
And it does create friction. So what evolves around that is you got to get more inbound. How can you market? Well, it's so complex and so hard. You got to do inbound calls, and you have all these people competing, trying to get inbound calls and outbound calls. And basically you had all these orgs that were just eating themselves alive. And a lot of it had consolidated under some of these Humana affiliated orgs. And what's happened is Humana's basically said, we got to slow down or stop a lot of the teledigital stuff because the quality of enrollments.
Well, I think it was more like, hey, we want to continue to grow and we need to do it, but it has to be in the right manner, sustainable with quality.
Correct.
And so, yeah.
So it is a fish, I think most people know they terminated some agreements with some of these organizations. But what's happened in the past was, let's say, Assurance. Everybody knows Assurance went out of business, and you had 4,000 teledigital agents that were all of a sudden into the wind. Well, what they would do is they would all go group up and realign under some other.
And what happens is my manager, Bobby
Correct.
Johnson, that's my homie, they landed over here, and Bobby's going to go recruit these 50 people and have this spin up over here at this new place.
And they all went and negotiated, and you had. We're no different, orgs like us that they'd come to and say, I've got this group of me and my 100 agents that I was with this team lead over here, and we lost our opportunity. And a lot of them kind of sat back in the catbird position of, what are you going to do for us? What are you going to throw at us? How many inbound calls are you going to give us? And what are you going to pay us?
How much cash will you give me right now?
How much onboarding bonus are you going to give me? What kind of, and we heard this crap for the past year, and it was
4 years.
Yeah. How about this? I pay you none. I pay you no bonus, but I teach you how to be an insurance agent and how to be in the business for 10 years and build it.
And I mentor you on how to actually run a business.
Exactly. I'm like, that's valuable. Not me paying you a $5,000 onboarding bonus because some teledigital you wrote 300 apps during OEP when your phone rang back to back to back and you wrote a bunch of poor quality MA business, And
93% of the time, they take the $5,000 and
don't deliver and suck and go gas for release and go try to find somewhere else. So what's happened is, as Humana's rightly so correcting some of this, a lot of those agents and groups, they leave one org and they just rematerialize under a different entity,
but with
right?
the same issues.
With the same issues, the same quality issues, the same retention, the same accretion, the same practices, the same, I want to write these files and they want to enroll, but they're not growing stable, predictable lifetime value insurance policies. And so Humana's just said, we got to stop. This is my opinion. It's my opinion. No one's ever communicated this. They've just said, we need to just stop this for a little bit, where you don't just knock this, stop this way of happening here, and then it just rematerializes under this different org, and they're just freezing that for right now. You have that, what they're trying to correct it from compliance and quality, and you have some of the other things that they've implemented, which are proactive retention and accretion monitoring, where they want a quality of business or you're going to be terminated preemptively based on quality. And a lot of it's to correct that quality. And then a lot of it is they have taken on so much business, like it's a watershed moment, that they don't need a whole army of teledigital enroller people to just keep hammering it all through 2027, right?
Well, and I don't have issues with that because I have to, every once in a while, like we sit in this unique spot in between the carriers and the agents, and we have a different viewpoint. And I always like to look at, from a different lens of, if I'm the carrier, what would I do? If I were the agent, what would I do? And, if I'm the carrier, I'm going, hey, we're paying a lot of money for commissions, and we have this goal to serve the consumer. And if we're paying, as a supplier, these vendors, FMOs like Agent Boost and these different agents to go perform services, I want good quality, and that's understandable. It's no different than, I've used the example before. If I'm remodeling my house and I hire a guy to do the tile and it's freaking crooked and uneven and the spacers are all uneven, I'm going to fire the person and have them redo it or go get somebody else. You want good quality work for what you're paying for, and that's what it is. And I guess that's the best analogy I can use is we have a huge chunk of workers in the industry, whether it's intentional or just unintentional. They're not well trained or not good, but they're just not doing good work. And I think that there's going to be continual efforts to try to find ways, and it's not just a Humana thing. It's going to be a lot of carriers that are going to try to find ways to either choke those agents out of the business or, even be more proactive in efforts to try to get certain agents out of the industry.
Correct. So I think there's, we're not disagreeing with the practice. We're just saying what's happening here.
And again, right? I think we would reiterate that this is not their official position. I'm not trying to say that we're like the mouthpiece for them or what they're doing. This is our interpretation of seeing like the actions of what they're doing and probably making assumptions as to the why that they're
correct.
doing.
And every single insurance carrier out there has chosen, just like any org, this is how we're going to react to this. These are the challenges we're faced with. These are the decisions we're going to make. We know United was very heavy and proactive about saying, all these areas are suppressed and non-commissionable, right? And they've stuck to their guns on that each carrier's had different, reactions to the problems that they're faced with that are facing the entire industry right now. And so what we've seen from our end is we're seeing a lot of these orgs and entities, and Dan and the wise man built his house upon the sand, right? There's a lot of these
upon the rock.
The wise man, but the foolish man, is that
the wise man built his house on the rock.
And the foolish man built his house upon the sand, right? And there's been a lot of foolish men that have built their insurance agencies and done a high volume over the past 5 years on basically the premise of a heap contract or a one and done commission up front. And their entire model was, I spend X amount of dollars in acquiring the business and I get X amount of dollars on the back end. I don't give a damn what happens to that life and that policy outside of that rapid disenroll period. I only am focused on what's my cost up front to acquire, what's my heap commission or my dollar amount up front there, how much net margin am I making there, scale to oblivion and do as much of that as possible.
And there's been so much investment activity from third parties and other people in that space to where if you look at somebody with a return on cash, and if it's anything above a 15% threshold, that's a pretty good return on cash. So they just don't even care. It's just, hey, that's great. Let's rinse and repeat. Let's just do this at scale. And I think some of those, and I don't expect that CMS or, that carriers are going to have any way to buffer or mitigate or change that, because those are just like market economics. They're going to happen. They're just going to be there. But I think the market itself has started to correct that, because the other thing that we've seen that we caution people about all the time, and look, you see it about, look at 2008. You can compare it to the mortgage crisis. You can compare it to anything else. We're kind of going through that right now where people to that point are running these numbers. They're looking at their cost going in, their OPEX, and they're looking at what they're getting on those heap contracts and that arbitrage or that they're getting.
Their net margin,
yep.
Yeah.
Then they're going, hey, let's just do this all day. But they're really not appropriately factoring for other risk. And like at the very core of what insurance is, it's the transfer of risk. And a lot of these people are not taking into consideration other things like appropriately accounting for clawbacks. And now they're not appropriately accounting for how many of these plans that are happening are plan changes and now they're a mirror commission instead of a full commission. How many, there's a lot of other factors that aren't being put in there, or that, even I talk to agencies who are not accounting for the appointment fees that some of the carriers charge per rep per state. They're not accounting for, as many of they're not properly accounting their accretion rate or their rapid disenrollment rates. They're looking at their enrollment number, like the highest possible number that they think they're going to make based on submissions, and already planning that that's the revenue that they're going to receive.
Yeah.
And they're making all their decisions. They're pulling out dividends. They're pulling out cash flow. They're continuing to invest in their business based on those folly kind of assumptions.
Yes. So what we're saying, just to summarize, is it's basically the end of days for Medicare call centers to the way that the industry had developed to that point. And we've talked about it many times on the podcast over the past 2 years. And a lot of people might be thinking, well, hold on, Agent Boost, don't you guys operate teledigital teams and have virtual agents? Yes, we've always called them virtual agencies, teledigital agents. And the way that we built them even from the beginning was on insurance policies, right? The residual, stable, predictable cash flow, tying those policies to an agent. And there's always going to need to be agents that can help people over the phone.
Attentions, proactivity, touch points.
Exactly. Yeah. And look, guys, it's not feasible to reach a senior or every human being face to face. There are going to be people who live in rural areas, people who don't want to meet face to face. There's always going to need to be a way to connect with those people and do a compliant enrollment virtually or over the phone. But it's the back end business model that's been messed up for some of these people. And the way that we've done it differently was, to Dan's credit and our early credit, we built Agent Boost on stable, predictable cash flow with actual residual policies. And even when we modeled out our teledigital teams, it was based on that, not based on how much money do we get up front on that. And as we've talked to all our leadership and even all our agents, we're very transparent, and we're like, we lose money on you for a long period of time until you write good quality policies, and we start getting those policies start vesting, and we see that residual income, and we're losing money in the short term to make money in the long term. And a lot of these businesses that I'm talking about were built ass backwards, where they were only taking all the money up front with nothing on the back end. And it just reminds me of the Warren Buffett quote, you never know who's swimming naked until the tide goes out.
Right.
And we've seen who's swimming naked now over the past year, and maybe find a funny graphic of someone covered up there. That's a good visual there, Mosiah. But that's the state of the industry right there. And I'm very happy with it overall. And even when Dr. Oz got into the CMS hearings, he was talking about there's too many agents in the ecosystem, and that's what he's kind of talking about. And we've seen it both in the ACA side now and the Medicare world, correcting out these enrollers and this self-perpetuating machine that just needs to be fed, that's just changing hands, right? That's just changing policies, and this call center over here switching them to this call center, and this call center over here switching them to this call center. That's not incrementally growing anyone's business. That's not aligning a consumer with a good agent that they're able to talk to and ask questions to. That's not achieving the goals of Medicare or CMS or the carriers. And now it's about which agents and which agencies are going to be able to evolve back into writing those good quality of policies.
No, absolutely. Yeah. Agreed. And we are slowly to that point, like I said, choking. It's not this really brazen thing, but I think it's going to choke out some of the agents. And look, again, if you're listening to this podcast, chances are you're probably not one of the bad apples or the agents out there. Most of the agents who are doing poor quality work, they're not investing the time to listen to a podcast for an hour talking about the industry or practices or anything else, right? These are, like I said, a lot of what I classify are, kind of gig workers and other things, people who are not really committed to, the industry, the role, the professionalism. It's a lot of those kind of people.
They've been an enroller, not an insurance agent.
And like I said, I'm okay. And I've had, look, since that announcement was made with Humana, I've been having my kind of like sessions with a lot of agency owners where we're mapping out and planning 2026. And for a lot of these agency owners, they've been like, man, I was planning on recruiting all these agents and now I can't, align them with Humana, and this is creating a lot of heartburn for me, and this is bull crap, and they're pretty upset, and they're like, how come you're not really upset? And that's what I'm saying. Like, I'm really not. Like, I understand that even for us, like Agent Boost, we're recruiting a lot of agents and onboarding a lot of people. And there is that element where it has the upside or the potential where it can harm us. Like, where I look and say, hey, the way that we get paid as an FMO is, and we always explain this, we don't get paid to go recruit an agent. We don't get paid to train, there's all these activities that we do, but we don't get dollars in until that agent actually goes and sells a policy, right? And so not having the ability to align agents right now for Humana, which is a very competitive and good product in just about every marketplace throughout the country, yes, there's that element where it really harms us. But when I look at the big picture, the big view, the macro of the industry, I really do understand it. Like, I get it. And I understand the reasoning behind it. And sometimes for things to be, sustainable and viable, you have to make hard decisions. And so I am not, critical for that move of Humana. I understand them doing it. I understand probably some of the reasoning behind it. And I'm okay. Like, even going back to the non-commission stuff from some of the carriers. Like, I know we've talked about it before, and there's a lot of noise from other people within the industry who are influencers or insiders or whatever, and they're fighting to force carriers to pay commissions. And we've said it many times, I don't think that would be a win, because then you're just going to create more chaos when they're forced to pay, and it's going to have a worse effect of what you wanted. And so I don't know. I just think that carriers need to be able to have that autonomy to make these tough decisions, to become sustainable, to stay viable, because ultimately, while we're in the midst of a little bit of pain temporarily, I always take the bad medicine. I would rather have to swallow that, get through it, and get through the other side of it. And if that's what this is with Humana, doing this for a short period of time, just give me the bad medicine. We'll get through it. We will course correct, and together as a partner and as the industry, we'll get through to the other side and have things be more sustainable.
Yeah, and to get more granular on what they did specifically, is they basically said after, I believe it was December 15th, I'll have to look at the email, but if an intent to transfer was not already in place or was not already in progress, they'll honor it if that was already in place. But anything submitted after that, I believe it was either December 10th or 15th, it's not going to be processed at all. Yep. So that's what they've done. So anything that kind of was in before the deadline, they'll still process. The other thing that Humana's been doing, and I don't mind it, is they've been holding proactive compliance measures for 69% accretion and retention, where they're basically saying if this agent is under a 69% threshold of accretion and rapid disenroll, meaning you write 100 policies and only 68 of them go into effect or survive through rapid disenroll, you're going to get terminated. And I'm okay with it, because you're telling me 32% of all of the business you're writing isn't even good enough to last the first 3 months. That's not a good agent, And
so I even have one that I'll just even say. I told him today, going to the restroom, I was like, you're a dead man walking. I told somebody. Maybe I shouldn't say that on the podcast, but I told somebody they're a dead man walking, because, we as a company put them on a written. So like, we actually have standards where, for any of our agents who are in these, virtual agents that are selling over the phone, to where we have all these standards of what they should be doing. And even if they're selling good number of policies, that's not enough. Like, we have quality standards. And so if they're not doing well, we put them on verbals, writtens, final writtens, and then we terminate them eventually. So we've already taken the step as a company to proactively say, hey, your quality isn't good, you're going on a write-up. But we just know that eventually a carrier is going to kick over a termination for this particular agent, and they're going to be gone.
and that's not even based on a compliance or a CTM. That's based on a quality of business.
Yeah, it's they're not having consumers calling in saying, "Hey, this person lied to me or bamboozled me." That's just they threw shit against the wall. I realize I curse on this podcast probably more than I should, but throwing crap against the wall and then just whatever sticks. And you can go and check agents' pipelines and see if they're following up, if they're messaging the consumer, if they're having interactions with them, and you really dive in and you can see everything. And so I guess what I'm trying to say is, yeah, I'm okay with it. If they want to say, hey, we're going to go be proactive and, terminate agents who aren't doing good quality business, I'm here for it because it aligns with what we've always done anyway.
Correct. And not only for the carriers, we as the FMO, as part of our responsibility and what we do, we're responsible for monitoring quality of business, and it affects our business models and stuff too. And frankly, we're as damn tired of it as everybody else is to keep talking ad nauseum about compliance with all these agents.
Do you remember our favorite agent a couple weeks ago that we actually gave them papers and said, hey, you know what? Like,
too much brain damage, buddy. You're out of here.
This just is not for you. Like, you need to find a new career path. And it's like, oh no, this is like, you broke my heart. Like, I have just been planning to be an insurance agent for the next 20 years of my life. And I'm like, guess what? I have bad news for you, my friend.
You're like, I wanted to be a Brad Pitt actor, but then I started going bald, so I had to change my career plans,
Exactly. So we were like, you know what? What may not be your path for the next is doing insurance, because let me hit you with all these numbers. Let me compare you to your peers. It ain't.
You got to pivot.
As my bishop when I was growing up told me once, things are not looking good for you, my friend.
Yep.
All right? If they're not looking good for you, man, you need to, change what you're doing, and it's not going to be here. So, like, here's some paperwork.
And some of these agents, I'm like, do you just not care? Or do you just not think that it applies to you? Do you not understand the importance of this after that's one of the main things we've been talking about for the past 2 years? You either don't care or you're just incapable of doing it. So this isn't for you. And we're going to protect our business, protect our partner's business, and we're going to find agents who want to do it. Because ultimately, if you're doing business like that, you're not going to survive, and you're not going to make money that you want to, and you're going to eventually be bounced out of the industry. Yep. So I think that, we've kind of belabored that point quite a bit, but that's really this kind of sets the tone for the state of the industry on the Medicare side of things overall. You have a couple of these other carriers that really grew a lot, like Devoted. I know they're ramping up team members and infrastructure to support. One of the things that I'm encouraged about with Devoted is we've seen how they scale and the way that they're built. And I think that they're operationally built to scale quicker and easier than some.
Yeah. And I would say that, like any partnership, relation, vendor, supplier, whatever, they've actually been open. Like, things have not always been perfect. I would even say with Agent Boost and Devoted, but a lot of times if we go to leadership and, raise something and say, hey, you know what, like, I know your intention behind this, but you're having the opposite effect, or this is what's happening. I would say at least they have been receptive or open to changing policies or adapting, which I actually really appreciate.
Yeah, and I think that, they're one that in some of these regions where they're built well, they do want to keep growing with good quality business. So, if I'm an agent.
And they also have like a national strategy, but then like a regional or local focus too, which has been good.
Yeah, so. And it's not all bad, guys. Like Dan said, if you're listening to this podcast, if you're an agent that gives enough, of a crap to pay attention to a boring insurance industry podcast, you're probably a better, more professional agent than some of these other people. And I think it's ultimately going to benefit us all. It's going to benefit you all that are doing it the right way. And we're not going to have to compete with some of the crap quality and always have to worry about, some bad acting call center stealing a good client or something like that by misleading them. And we're going to get back to more good long-term values of the policies, because we've seen LTVs of policies degrade over the past 5 years, and we've seen, a massive increase. It's just going to force everybody to get better is what I'm saying. So I wouldn't be really too disheartened about the way things are. You just got to keep kind of surviving these difficult periods so you can see the correction.
The other thing before we wrap, I think we can talk a little bit about ACA and maybe at least throw out the little carrot for great healthcare plan. Those are the last things I'd want to talk about. But, you know, along those lines, here's an observation too that I would just say in my kind of debriefs from AEP and my 2026 planning sessions that I've already had with agency owners, you know, as everybody's trying to look at the landscape, as we've been talking about on this episode, hey, I'm reading the room, Dan. I understand like the landscape for 2026. How am I as an agent or an agency owner going to like grow and continue to win, understanding all these dynamics? And one of the overwhelming themes has been that we all as people, things are very psychological. And a lot of the legacy agents that have lived through the 2007, the 2010, the 2015, or the 2020, we have all these different segments of the agent population, as we've mentioned before. And it seems like the agents that have been in it for some time have a really broken mindset about the state of the industry right now. And so they are very much struggling to adapt, to either improve their quality, to grow their businesses and be effective. When I go and recruit like a brand new person who has no preconceived notions, they are not broken, they don't have any idea. We are seeing that brand new people just coming in, they don't have any baggage, and they have nothing but positivity and ambitions to grow a business and to have a career in insurance. And these people are actually crushing it. And it's been quite fascinating from a trend perspective to see those people just really crush it when they don't have all the knowledge and know-how and experience, but yet they're doing very well. And yet very tenured and experienced people are very much struggling. Yep. So that's one little, I guess, nugget that I would throw out here on this episode that's also been an emerging trend over the last couple of months that I've really observed.
Yeah, but maybe before we talk too about the ACA stuff is I would say, what are we expecting for 2027? And I think 6 months ago, we were probably more optimistic about 2027 and some increased funding and kind of a back to more growth and a proliferation of Advantage plans again and expansion and back into rurals and things like that. I don't think that's going to happen for 2027 just because you look at the timing and not much has changed, right? If you look at CMS's focus and Congress and our government, they've had all this ACA stuff that's been on the forefront and a bunch of other fraud stuff, and they haven't really solved it all.
And you know, the other thing, not to get into, you know, politics on the podcast too, but if you ask Dan's opinion and take it for whatever it's worth, mm-hmm. you know, the Republicans are going to lose the midterms, you know, by and large for the most part. And then you're going to have, you know, a house divided, so to speak, and they're not going to be able to agree on anything. And we're going to have a lot of infighting for the next, you know, probably year or two with not a lot getting accomplished. I mean, if you're asking me my opinion, that's what's going to occur. And so you're right. I don't think that, you know, there's a significant focus to, we should talk about the new, you know, compensation model with CMS that's out there. And, you know, maybe we'll have a guest on to talk about that.
Yeah, we need to talk about the CMS, Medicare.gov changes and the NPNs and things like
so
that.
We'll have to do that. But I don't think a lot's going to happen there significantly. And so, look, it's what it is, peeps. I mean, there's always room at the top. If you want to make money in this industry, you know, hit us up. If it's just, look, the way you make money is becoming an insurance agent, and you've got to be good, and you got to know it. You've got to have a long-term perspective and mindset, and you have to be willing to put in the work and grow. And there's opportunity for people who do that. And we help people every day. If you're one of those people, hit us up. We'd be happy to help you. But it just is not the get-rich-quick scheme.
Yeah, if you, to add on to what Dan's saying, we do a training every month called our Elite Agent Trainings. It's free. It's free for any agent that wants to come. Register on our website. Look it up. We'll put a link in here. Mosiah's just finishing up a cool trailer for it. We alternate it pretty much between our Tampa headquarters and our Salt Lake City headquarters. You can come out for free on your own dime. There's no catch. There's no gimmick. We're not going to pull you over into a room and like a timeshare and make you sign up for Agent Boost. We'll teach you for free of what an agent needs to do to be successful in 2026 and going into 2027 right now. And if you're one of our agents already, we'll pay for you if you've become an active agent to come out and do it. And it's been highly, highly successful. I think it's been one of the best things we've done over the past couple of years because 80 plus of the agents that attend that go on to become not just an active agent, but a highly productive agent, and an agent that is surviving, and not just surviving, but thriving during these challenging times. And so those are the types of things that your partner, your FMO, should be doing for you. They shouldn't be just like, housing your contract and sending you an email. If you are interested, look that up, because I think it'll be highly beneficial for you.
Agreed. Before we totally wrap on everything, maybe we just talk about ACA, because it just, is wrapped, as far as open enrollment. Just a couple little quick housekeeping things there. I think that we may still get an SCP that opens up in March or April, that might be extended. So just FYI, keep your ear to the ground on that. It's looking less and less likely for any sort of enhanced subsidy at this point. So to be clear, subsidies reverted back to the original, kind of Obamacare era of having those subsidies, but did not renew the enhanced subsidies that happened, during the COVID era. So those enhanced subsidies went away. And, Mike and I were talking about the poly market earlier. Look, whether you like it or hate it, the poly market tends to be right, most of the time. And the likelihood of them being renewed has dropped from 30% down to more like 8, 9, 10%.
Yeah, I think before March, currently on call sheet and poly market, it's about 9% before March. 10% around in April, and just that they get done in 2027 at all, it's like sub 30% now.
And why? Because I think the midterms are going to happen again. The are going to lose, and they're not going to be able to get crap to agree on.
Well, and it's been obvious that they're now shifting gears to try to focus on this Great American Health Plan, or whatever they're calling it, and we can cover that more in a future.
Which would only cover coverage for like 1 month.
But it's like, great.
Yeah.
That fixes things 10%, and it's very broad. And yes, I think those are necessary changes, but
it seems like a concept or an idea.
That doesn't put the Triscuit crackers in our stomach for right now.
It's not an executable plan at this stage. So yeah, there's issues there. So as far as, if you're selling health products, we're still seeing a real smattering of coverage. We're seeing some people on the exchange. We're seeing people off the exchange, direct with the carriers. We're seeing people write short-term medical as much as they can with those 3x12s. We're seeing agents write like Christian ministry or health exchanges. We're seeing association business being written. So we are seeing a whole smattering of products being written on the health space due to the fact that we're not having these enhanced subsidies. Okay, so that's kind of the state of it there. And then, like I said, great healthcare plan sounds right now more of like a concept or an idea with a little bit of dollars, but not a lot of substance and execution yet on that idea. But I think we should dig into it deeper on another episode. So.
Yeah. Long story short, ACA subsidies probably not coming back anytime soon.
And again, I'm okay with it.
Yeah. If you want to be successful in 2026, learn to become a diverse, dynamic agent. That when you come across all these different consumer situations, you have a plan, you have a solution, you have a policy that you can help them with. That's how you win.
You need to be the agent that's out there asking, leading, and identifying questions to your consumers to figure out, like, okay, let me, do this evaluation and figure out, am I putting you here, 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 or here, right? And if you're not offering all those products and you're not dynamic, you're probably losing a lot of money and not doing a great job for your clients. So,
yeah, covered a little bit all over, guys, but happy to get back on track and be putting out some consistent information for you. So, make 2026 going to be a good year. Going to be a good year.